Hello and welcome to India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. Birla Cement supremacy. Birla's Ultratech acquires a 23% stake in India Cements for nearly 1,900 crore rupees. The move comes just a week after Adani's Ambuja Cements acquired Penna Cement. Reliance Jio hikes tariffs plans is around 20%. Unlimited data plans from the 3rd of July. Airtel and Vodafone Idea likely to follow suit. The record run continues on the last 24,000 mark. For the first time, the Sensex goes past 79,000. Both indices are up 7% at the end of the June F&O series, the best monthly performance so far this year. Come tomorrow, Indian bonds will mark their entry in the JP Morgan Emerging Market Bond Index. Indian inflows worth $8 billion. Analysts expect $25 billion in inflows after the JP Morgan Index inclusion. The health of India's financial system is robust even under a severe stress scenario, shows the RBI's financial stability report, but it warns about a risk build-up in retail loan segment, also flags a potential rise in bad loans across NBFCs. Market regulator SEBI introduces a new fixed price mechanism for voluntary delisting as an alternative to the reverse book building process. Also restricts registered entities from using unregulated entities, including finfluencers, to market their products. Relief for Samir Modi in his boardroom battle with Mother Beena Modi. A Delhi court restrains Beena Modi and the Godfrey Phillips board from removing him from the boards of KK Modi Group company. Says it will prima facie cause irreparable harm. Also bars them from shutting down retail chain 24/7. President Draupadi Murmu calls the emergency of 1975 the dark to both houses of parliament. Sparks protests from the Congress. President also promises action over paper leaks and a fair probe into the NEET irregularities. Kenya braces for more protests even after the country's president makes a dramatic U-turn, withdrawing the contentious tax hikes. 23 people have been killed so far in the violent protests that have seen Parliament being stormed briefly. US President Joe Biden will square off against his Republican challenger Donald Trump in the first presidential debate. CNN will host the debate in Atlanta, which will begin at 6:30 a.m. India time tomorrow morning. In just a bit, but first up, the market action of the day, and the record run continues on the Lal Street as the Sensex and the Nifty hit fresh lifetime highs in trade today. The Nifty gaining over 170 points, crossing the 24,000, closing above 79,000, 79,243, up almost 600 points. The Nifty Bank taking a little bit of a breather today, and the mid-cap index also closing in the green. So we've continued to see the markets clocking gains even as the mid-caps underperformed today. The Indian government bonds will enter JP Morgan's Global Bond Index for emerging markets tomorrow. The inclusion will be done in a phased manner, with a 1% weight getting added every month. Indian bonds will eventually have a weight of 10% in the index, and that is by March of 2025. The total market value of bonds following the inclusion will be about $300 billion, and this means that funds could be purchased at least 30 billion of Indian bonds by March next year. That's the kind of expected inflow. So watch out for the inclusion. The announcement was made, but final inclusion starts tomorrow. A quick look at the monsoon tracker. Rainfall deficit is widened further across a pan-India basis. 16 states and union territories have reported a deficiency of 33% and more. Punjab has reported a rainfall deficit of 79%. Neighbouring Haryana has reported a 72% deficiency. Meanwhile, the western coast has seen heavy to very heavy rainfall in the last 24 hours. This includes coastal Kerala, coastal Karnataka, Goa and some districts in Maharashtra. But straight to the top story this evening. It is a battle for supremacy in the cement space. Weeks after Adani's Ambuja Cements acquired Penna Cements, Birla's Ultratech has acquired a 23% stake in India Cements for nearly 1,900 crore rupees. Veteran investor Radhakishan Damani, his family entities were the sellers. Ultratech is the leader in the cement sector, commanding a market share of 28%. Now, its market share in South India stands at 11% and it is expected to grow further with a significant India Cement stake in its kitty. So that's the latest there as far as the cement power play is concerned. Prashant Nair, who broke that story early this morning, joins us now to decode the India Cement's deal for our viewers. Prashant, what's in it for Ultratech?
You know, it's a big deal and this happened this morning in the cement space. We at CNBC TV 18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of what this actually all means. So, cement major Ultratech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. Ultratech has put just under 1,900 crore rupees to work to pick up 23% equity stake in India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family, which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So, price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the southern markets, South India markets. What about valuations of the deal? So, at 267 rupees per share, Ultratech equity investment is valued at $85 per ton on an enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now, provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of Ultratech's holding in India Cements, what does this do to Ultratech's own capacity? Now, currently Ultratech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, Ultratech will more than double its capacity in South India to 45 million tons per annum. In terms of market share, this would translate a 22% regional market share for Ultratech as compared to the 10% before this transaction. Remember that the two top players, essentially Ambuja and Ultratech, between them in the southern markets are expected to control 35% of the total capacity there. Now, just to look ahead, India Cements, apart from the cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like Ultratech can put to good use. So there you have it. Ultratech, the largest cement player in the country, adding another important asset to its kitty and really moving towards its stated goal of reaching a long-term capacity goal of 200 million tons per annum. Back to you.
All right, Prashant, many thanks. And as Prashant was mentioning, buying into India Cement gives Ultratech more presence in South India. The race between Birla and Adani is only heating up. Here's a closer look at Kumaramangalam Birla and how he's currently overseeing an annual cement capacity 153 million tons. That is the cement capacity for the Birla Group. Over to Gautam Adani's companies, that stands at about 89 million tons a year. Now, Birla's cement portfolio includes the crown jewel, Ultratech, Kesoram Cement, and now India Cement. Gautam Adani's cement portfolio includes Ambuja, ACC, Sanghi Cements, and the most recent Aqua Cements. Kumaramangalam Birla is aiming for a cement production target of 200 million tons per annum by 2028, and Gautam Adani is targeting 140 million tons per M&A activity in the cement space. Who are the next potential candidates for acquisitions? Details. Hormuz, who should we be watching out for?
Every time a deal like this takes place in any sector, the stock starts buzzing on the street saying this might become a potential acquisition target going forward. So we've tried to find out at least 4 of the cement companies. We have spoken to analysts also who mentioned that they might be the targets because they are under considerable financial stress. So Sagar Cements is one of them, and Cements is Wandra Cements sometime last year. So that has a capacity of 10.5 MTP, a clinker capacity of 6.5. It has 3 units in Odisha. It's been an underperformer over the last 12 months, just 16%, trades at an FY25 EV to EBITDA of 9.2 times. The other one has 2 units in Telangana and Andhra Pradesh, capacity of around 3 MTPA, 12 months, around 24% higher in the last 12, 6.2 times. KCP is the other one, and that was in focus all through the month of June because of the frenzy that we saw in all the Andhra Pradesh linked companies. Most of its plants are in the state of Andhra Pradesh, 4.3 MTPA capacity. The stock has doubled even more in the last 12 months most, and trading at an FY25 EV to EBITDA of almost 9 times. And lastly, Orient Cement. We've spoken to the management multiple times and they have kept denying the fact that the company is not on the block, but 8.5 MTPA, 8.5 presence in 11 states. That stock has also doubled in the last 12 months and an FY25 EV to EBITDA of 9 times. So multiple targets. We are yet to know what happens to India Cements now, but these are some that you should keep on your radar. Back to you.
Well, Orbaz, many thanks for joining us. The other big story this evening, Reliance Jio has hiked tariffs for the first time in over 2 years. The average hike across various plans is about 20%. It's also announced new unlimited data plans from the 3rd of July. Rima is standing by with the details. Rima, this has been anticipated widely by the market. It's coming after almost 2.5 years. Take us through the details of, in Sunil Mittal's words, the tariff repair and the tariff hike announcement that's coming.
As you correctly pointed out, Reliance Jio has hiked tariffs for the first time in 2.5 years. This is much anticipated. The broad range of tariffs is between 12 to 20. On an average, it appears to be 20%. Just want to take an example. One is the base plan, the minimum entry plan. That has gone up by 21.9%. There are 2 popular plans. One of them is the 1.5 GB plan, for that's 28 days. Hike is about 25%. 239 has become 299. The second popular plan is again a 1.5 days, which is basically approximately 3 months. And there the tariff increase is about 20%. So 666 goes up to 799. So as I said, the broad range is 12. The popular plans have seen an increase of 20 to 25%, but analysts estimate on an average the blended increase should be closer to 20%. This is going to be effective 3rd of July. Now, again, what's the benefit to the financials of Reliance Jio? A 20% tariff hike. Now, there will be some extent of down trading, which means customers may fall off. Customers may choose not to migrate to the higher value, to the higher plan, the more expensive plan now, the same plan which costs them more. They may choose to say that, I'm willing to give up on some data and go to a lower value plan. That's called down trading, and that's always possible, and that does happen. Whenever there is a 20% tariff increase on an average, it doesn't mean all the 20% flows through into your top line. Maybe 15-16 flows through into the revenue, but the benefit on margins is a lot higher because the costs are fixed. Now, what is the street going to watch out for? One, Bharti and Vodafone Idea. I suspect they're not going to waste any time and they're going to their tariff hike, which should be on similar line. But that's going to be the first thing the street's going to watch out for. And 2, whether there is going to be any sort of down trading. Is this going to pinch the Reliance Jio customers, and will they try and give up on this, live with less data but pay a lesser amount? So that's going to be another thing that the street will watch. The stock has done well. Reliance Industries, Reliance Jio becomes a part of the consolidated Reliance stock, and that's a stock which has seen a gain of close to about 5.2% this week. So the street was anticipating a price hike. It's come through, but it's at the upper end of the expectation. On an average, close to about 20%, but some popular plans have seen a price hike of more than that.
All right, Rima, many thanks for joining us. And as Rima was pointing out, with Jio announcing a hike, Airtel and Vodafone Idea are likely to follow suit. Here's Sunil Mittal speaking to me in March this year, calling for a tariff repair. Take a look.
For several years, we spoke about that 200 rupee ARPU. You've got to that, and now, of course, looking at perhaps 300. What's the outlook as far as telecom is concerned? You've been on the premiumization side of things for a while now. Is a tariff hike possible, likely, on the cards? Take me through what the dynamic looks like at this point in time.
Gopal uses the word tariff repair, and I think that's the right word to say, because hike always looks pretty aggressive. Fact is, when I was in Barcelona just 2 days back for the Mobile World Congress, people are stunned at what level of ARPUs the Indian industry operates. $2.2 a month for almost unlimited bandwidth that is sold. 2 GB a day can't even be comprehended by the Western operators, who operate at $30, $40 a month with probably half a GB a day. So Indian industry, if it has to be viable, and these digital highways that have been built, especially by the 2 main operators, really need to be financially sustainable. For that, I have mentioned 300 rupees ARPU, which will still be just $3.50. Next pit stop is 250, then hopefully 300. And if you ask me, I hope it happens within the coming financial year.
So 300 within the coming financial year, or 250 within the coming financial year?
I hope they should be 250 and then 300 by the time we close the next financial year.
Well, that's Sunil Mittal. We'll have to wait to see when Bharti Airtel decides to hike tariffs. Now, the health of India's financial system is robust even under a severe stress scenario. That's as per the RBI's financial stability report. The report, which was released earlier this evening, also warns about risk building up in the retail loan segment and a potential rise in bad loans across NBFCs. Ritu's here with more details. Ritu, take us through the highlights of the RBI's report.
It's a mixed picture that RBI is painting in the latest financial stability report, even though it emphasizes that the financial system overall is stronger than before, and both banks and NBFCs do have enough capital buffers to withstand macroeconomic shocks. However, in this stable environment, RBI says it remains watchful of any emerging risks. Now, banks' gross NPAs are at a 12-year low thanks to both lower new bad loan addition and also high write-offs. And sectorally, RBI finds agriculture has both ratio and the overall contribution to bad loans for banks. Stress test results show overall gross in the baseline scenario and remain at 2.8% in the medium stress scenario, but they could rise to 3.4% in the case of severe stress by March next year. In the worst case scenario, public banks could see gross NPAs rising to 4.1% and private banks 2.8%. The stress test also finds that capital adequacy of banks could fall even in the baseline scenario, but then this is not so unexpected. Now, importantly, RBI has raised a red flag on retail loans, saying that for private sector banks, the share of slippages from retail loans, excluding housing loans, in overall fresh accretion to NPAs is increasing, with retail NPAs forming 40% of fresh NPA addition in FY24 and the share of these loans in total advances at more than 21%. In the case of NBFCs, the stress test results show that even in the base case, bad loans could rise from 2.7% to 3.5% by next year, and capital adequacy could also fall, with as many as 8 NBFCs failing to meet the minimum capital requirement in case of rise in stress. But keep in mind, these test results are not meant to be a forecast, but just to measure resilience under a hypothetical stress scenario.
All right, Ritu, many thanks for joining us. And from one regulator to the next, market regulator SEBI has introduced a new fixed price mechanism for voluntary delisting as an alternative to the reverse book building process. SEBI Chief Madhavi Puri Butch has also announced new criteria for the entry of a stock into the F&O space. The regulator has also restricted registered entities from using unregulated entities, including finfluencers, to market their products. Take a look.
We had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in entities which are regulated by us. They are now being mandated that they cannot associate with people who do one of two things, either of two things. One is if they are not registered investment advisors or research analysts, and yet they are giving investment advice or research analysis. The second is unregistered. If they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law.
Well, that's Madhavi Puri Butch, the SEBI chief. Up next on India Business Hour, President Draupadi Murmu calls the emergency of 1975 the darkest chapter. In a joint address to both houses of parliament, triggers protests. That and more when we return. You can catch all of CNBC TV 18's news and updates on Facebook, X, Threads, Instagram and Jio Cinema. Well, relief for Samir Modi in his boardroom battle with his mother, Beena Modi. A Delhi court has restrained Beena Modi and the Godfrey Phillips board from removing Samir Modi from the boards of the KK Modi Group companies. The court has also barred them from shutting down retail chain 24/7. Ashmit Kumar standing by now to take us through the latest in what transpired in court today. Relief for Samir Modi. Take us through what the court has said, Ashmit.
Well, trouble clearly brewing and boiling over at the promoter family as well as the board of KK Modi Group of companies. Bear in mind that Samir Modi had filed an FIR on May 30th. In that FIR, Samir Modi, who's a director on Godfrey Phillips, had alleged that he was brutally assaulted by the PSO of his mother, Beena Modi, who sits at the helm of Godfrey Phillips' board of directors. Not just that, he said that he broke his finger, he filed an FIR, sought an investigation, even moved to Delhi court for monitoring this investigation. Now, that of course is the context. Parallel to all of this, he moved a fresh application again before the Delhi court, and here he argued that this incident of May 30th was indicative of a larger issue within the family, and to that end he said that he has two fears, two apprehensions. Number one, the fear is that he'll be thrown out of the board of Godfrey Phillips as well as other KK Modi Group companies. The second fear that he expressed is that he invested considerable amount of time and energy in setting up the retail division of Godfrey Phillips, goes by the name of 24/7, and that Godfrey Phillips has resolved to run that business and continue that business. On both these fears, Samir Modi argued that this will cause him irreparable harm. Importantly, the Delhi court prima facie has agreed with relief, restraining Beena Modi from number one, throwing him out of the board, and number two, ensuring that Godfrey Phillips is directed to continue with the retail business 24/7. So important reliefs coming in, big reliefs coming in for Samir Modi. What's also important to point out that two aspects. Number one, these are ex-parte orders. Beena Modi was not heard while passing these orders. And number two, in the same breath, Samir Modi has also sought to extend an olive branch, saying that he hopes that this issue is resolved via negotiation and mediation.
All right, Ashwit, many thanks for joining us. Here's some other news in brief. Infosys CEO Salil Parekh has paid 25 lakh rupees to the market regulator for failing to have adequate controls to prevent insider trading. The case relates to a 2020 partnership between Infosys and Vanguard when Parekh was the CEO and MD of the IT major. SEBI has said its investigation revealed that certain information, which was unpublished price-sensitive information, had not been considered by Infosys. NVIDIA shareholders have approved the compensation package of CEO Jensen Huang. Among other proposals, Huang was granted a compensation package of over $34 million in FY24, 60% rise from the previous year. This includes stock options, bonuses and additional expenses. However, Huang's package still remains the lowest among his peers in the US, including Tesla CEO Elon Musk, who took home a whopping $46 billion last fiscal. At a shareholder meeting, Huang addressed questions on rising competition in the AI chip chip space. He said Nvidia has already transformed into a data center-focused company and is looking to create a new market for AI in industrial robotics. Remember, the company's shares have surged over 200% in the past year. President Murmu addressing a joint sitting of the Parliament today. In her 1 hour, 10-minute long address, the President highlighted the achievements of the previous government. She said that the upcoming budget will be futuristic and will facilitate fast-tracked reforms. Murmu said that the government will investigate the paper leaks. She also called the emergency of 1975 the biggest and darkest chapter and a direct attack on the Constitution. Well, the Supreme Court has issued a notice to the National Testing Agency over alleged irregularities in the evaluation of the NEET score. The apex court has sought a reply from the agency by the 8th of July when it is scheduled to hear the matter. Meanwhile, students affiliated with the Congress Students' Union of India barged into the NTA office today and demanded that it be shut down. The BJP and Congress MLAs protested at Municipal Corporation of Delhi House over the water crisis in the national capital. They also raised slogans against Delhi's Chief Minister Arvind Kejriwal. Meanwhile, BJP leader Ramesh Viduri led a protest by party workers outside the Jal Board's office. A new international airport will likely come up just 40 kilometers away from Bengaluru. Tamil Nadu Chief Minister M.K. Stalin has announced a plan to build an airport on the 2,000 acres of land in Hosur. Speaking at the State Assembly, Stalin said the airport will be designed to have a capacity of 3 crore passengers annually. He added that he wants to make Hosur an important economic zone as it's been attracting major investments in the EV space in the last few years. Hosur houses the operations of major companies like Tata Electronics and TVS. British Prime Minister Rishi Sunak and Labour leader Keir Starmer faced off in their final televised debate ahead of the United Kingdom's upcoming election on the 4th of July. The candidates went head-to-head over issues from health to immigration, ethics, and struggled to be heard above a noisy protest outside the Westminster's betting scandal was also a topic on contention, with Starmer arguing that the Prime Minister's action was not severe and decisive enough.
What I did when one of my team was alleged to have been involved and investigated by the Gambling Commission, they were suspended within minutes.
We had an independent internal inquiry into what happened, have taken action and suspended the candidates involved, and I've been crystal clear that they should face the full consequences of the law. It's about leadership in politics. That's what Sue's question was at, was a broad question to do that. I also think leadership means being straight with people. It means having the courage of your convictions, not changing your mind on every single position that you've taken, and being upfront about what you want to do for the country. That's not what Keir Starmer is doing. He's not being honest with everyone about his plans to raise their taxes.
Well, from one debate to another, US President Joe Biden will square off against his Republican challenger Donald Trump in the first presidential debate. CNN will host the debate in Atlanta, which will begin at 6:30 a.m. India time tomorrow. Kenya braces for more protests even after the country's president made a dramatic U-turn and withdrew the contentious tax hikes. 23 people have been killed so far in the violent protests that have seen parliament being stormed briefly. The president of Bolivia appeared to have survived the coup attempt after urging citizens to take to the streets. A top army general who led the coup attempt has been arrested after he failed to topple the left-wing government. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. The news will continue here on CNBC TV 18. Stay tuned. We're back with a lot more.